Welcome, everybody, to the San Luis Obispo Real Estate Podcast with Mr. Hal Sweasey. You're back. We've missed you, Hal.
Thank you.
It seems like you've been gone forever. I don't know what's going on.
Sharon said I have to go through the new employee training again because I've
you
been
should.
gone a few days.
Yeah, new employee Team Sweasey orientation.
Yeah.
So, that's great. And then the guy that pays for the lunch, JT, how are you, sir?
I do what?
What? Yeah, the orientation, you pay for the lunch.
Oh, the orientation lunch.
Yeah.
Oh, yeah,
No
I'll pay
lunch.
for that.
Yeah. Perfect.
Yeah, exactly.
Hey, but while Hal was gone, we were so fortunate to have Bobby Kelly pinch hit to do your market update for the
She does
month
a great
of July
job.
here in August, with the July stats here in August. And we thought we'd take a few minutes to just talk a little in more depth on the subjects that Bobby brought up, huh? Does that sound like a good plan today?
It wasn't the new football season or
No.
the dog days of summer. Real estate.
Football season starts next month, doesn't it?
There was
preseason. No,
yesterday.
preseason.
Those don't really count.
No, they
it's
don't.
still fun to watch.
I mean, they don't
You're
count.
so right, JT.
I like
that does not count as football.
Oh,
Like Saturday,
they're
I didn't wear
playing
any
the games.
of my Niners garb. It doesn't count.
yeah. Well, you wouldn't want it on the first week.
So she brought up a couple of topics that I thought were, kind of stuck with me that were important, and I know they're things that you think about every day.
Of course.
And in the market conditions that we're in today, and I know they change every day. Pricing.
Yeah.
How important is it to come out of the chute with the appropriate window of pricing?
It's more important now than probably ever. There's a couple of things that are important. Pricing for sure. When I sit down with someone, I try to find examples of what's happening. A good example. Okay, this one got. I did one recently, and they went 100 or 200,000 over asking price, and this was in a multi-million-dollar property. So, hey, that shows that enough buyers are still out there that if you're under the market, it can go over. Had an example of one where they got an offer right away, but the seller was a little cavalier, passed up on it, and then they were sitting on the market, and now they're actually listed below what that price was. I share examples where they've come on the market, like a clean single-level house in San Luis Obispo View would have sold pretty quickly with multiple offers 6-7 months ago. Get a great offer over asking price, but then the buyer gets cold feet, which we saw a little more of for a while. That's calmed down. And then later, they're a month later, and they don't get their price. So that entry price is really, really important. So we take a lot more time when we're talking to a seller to explain it to them. We're doing a lot more research. We're making a lot more phone calls on other competing listings on what's really been happening. All that information is critically important for sellers right now. So take your time, get the right information, and really pay attention when you choose that price.
And you can't use comparable sales from 6 months ago. You got to use them from 6 days ago.
Yeah.
Right now, right?
Or pending sales. Yeah.
Yeah.
So we used to, because of a lower volume of sales, go back a year, no problem, because the market's pretty steady. Now we can't use that, right? And if we do, it's going to be probably a little bit less than it was a year ago.
Miss Bobby also shared with us that 61% of the properties are selling in 30 days or less, that the average days on the market was creeping up a little bit month over month from 36 to 38, which, you've been in this business a long time. That doesn't seem like a lot, right?
No, I've got friends in other markets that are 5 or 6 months is the average absorption rate, the time it takes to sell everything, right?
But
which is important.
If 61% of the properties sold in 30 days, I would say 61% of those properties that were on the market got priced right.
Or adjusted.
That means that probably 39% they got wrong coming out of the chute, or they'd gone pending.
Oh yeah. No, when we print out our market stats, we have active listings and the days on the market. I mean, if I look right here, I've got it in Morro Bay for active listings is 100. For those that sold, it's 62. Right? That's Morro Bay, and that's 1 month.
Right.
So you get it right, you usually do better, and taking more time is usually not better for an owner in most markets.
In the very high end, that's the one of the areas that's really hard to get right, isn't it?
Yeah. Here's the thing, the things change so fast in today's world, and they change a lot faster in real estate. And when you get used to fast and then they're slow, it's kind of frustrating. right?
Sure.
You know, you used to get a burger in a minute. Now, if you have to wait 20 minutes, you're like, what's that? Or I have to wait in line for gas when I go pump my gas. So we used to find out really fast. Now we have more of a normal market where the number of homes versus the number of buyers, it might be someone that just sold their house that's smaller and wants a bigger house. Now they're a buyer. Or they sold their house in Southern California, now they're looking to buy. So there might not be a buyer for a home for 3 or 4 weeks. So when that one buyer does surface, whether new to the marketplace or sold a house, you hopefully want to be the one to capture that buyer. And that's the kind of conversations I have with a seller. And that's why if we even have someone looking at our house that's interested and we've been on the market a month or two, I'm going to ask that buyer's agent, whether it's mine or somebody else's buyer, hey, are they looking at another house? Yeah, they are. Okay. Are they having trouble making a decision? Yes, they are. Well, I'm going to coach my seller on how to entice them to come to us first. Because if they buy that house and it takes another 3, 4, 6 weeks for the next buyer, they might not be as happy.
So I've heard some people around the office talk about reverse offers. Is that what you're talking about? Make a reverse offer?
A little bit, yeah. You know,
Okay.
if we're listed at 1.5 and the seller said, you know, hey, well, bring me an offer. Well, what would you consider? Well, $1,450,000 instead of $1,500,000. I go, how about you let that buyer know? Give me permission to go to them and go, hey, if your client brings an offer my client will do it for $50,000 less for your buyer. Well, at least it'll pull them over to make an offer. Because
Right.
John, even if they make an offer, and let's say it's $1,400,000, not $1,500,000, not $1,400,000, $1,400,000, that's a good starting point.
Right.
And we can negotiate. And if it doesn't work out, here's the benefit to the seller. Even though it didn't come together, when the next buyer comes along and says, have you had any offers? And I tell the person, no, that's not a good sign.
Right.
When I tell them yes, oh, okay, then there's been other interest. That's very important. Okay, so the pricing, the reverse offers, the communication, all that is really critical in today's marketplace.
Yeah, this one podcast I was watching over the weekend said, you know, this lady who listed a house, and she told the seller, you know, we're going to price this thing right. We're going to have 15 people walk through the house this weekend. Well, 3 walked through the house.
Ouch. Yeah.
But they got an offer.
Good.
And they got an offer that was good enough to consider.
Yeah.
And her coaching to the seller was, hey, we were disappointed on how many people looked at your house, but you have an offer.
Right.
And how do you coach sellers to really value getting an offer? It may not be exactly what you were hoping for, but how do you coach sellers to value that?
I think by just showing them the facts, the length of time it takes. I use a lot of recent examples. I mean, that's what boots on the ground. That's what we're seeing every day. Here's the Joneses just listed their house. They got an offer, you know, a good offer. They didn't take it. You know, we talked about this a minute ago, and you know now they're considering less. So, and I also try to say, hey, if we feel like we're not getting the best price that we were hoping for right now, what does it mean for where you're going next? Because people get fixed to a number, right? So if they would have sold it 6 months ago and they would have got a little bit more, fine. If they're going to buy another house, are they going to pay more for that house now or less? Maybe less. So I'm just trying to piece it all together for them so they get the bigger picture, and just let them know that, you know, it's a normal market. When a buyer shows up, you should be excited. It may not work out, but let's give it our best go and let's really think carefully before we make a rash decision.
Yeah, it's we used to say in the insurance industry, you know, you wanted to keep your clients because it was much harder and cost you more money to bring on new clients than it is to keep the ones you've got.
Yes.
Hope they didn't cancel their business with you, right?
Yes.
So I think that it's a similar thought process
It's a business perspective, and when you own a house and you're selling it, you're now in the business
of selling
your house.
Yeah,
and when a
right.
customer walks in to your business, you treat them with respect,
Yeah,
right? And
exactly.
if they have interest, that's great. If it can't come together, that's fine. But, you know, it might be a while for the next customer to come through.
So let's talk about the current state of inventory in our county.
Mm-hmm.
Up a little bit, or not. It's up significantly over a year ago.
Sure.
But you wouldn't call it a lot of inventory, would you?
No. And, you know, I'll look at specific numbers, but I would say we've kind of leveled out for the most part, depending on what you look at. And the way we measure them, if we have 500 active and 200 that sold that month, last month, that means that it would take at that rate to sell all those 2.5 months to sell all the houses.
That's not a lot, right?
No, that's still what we call somewhat of a seller balanced market here.
Yeah.
But we're a small town. If you go to Reading or a rural town, they might have 1,000 homes and 200 sell a month, same as us.
And Texas and Florida are way different,
yeah,
right?
Every market's a little bit different. But circling back to the point, I think is, if you own a property, you're selling it, be a business owner that's a good business owner. Take care of your clients. Be respectful. Don't have to do business with everybody, but if you have somebody that wants to buy what your product is, pay special attention to them.
So we've had some fun on these podcasts over the years, trying to, and I would say in my case, unsuccessfully predicting the future. A year ago, I predicted interest rates would be in the low 5s today.
Yes.
Yeah, I'm only off a little bit.
Yes.
Like a point and a quarter.
What's 1%?
Yeah.
Yeah.
We got a Fed meeting coming up in a couple of weeks. If you read the internet, believe everything you read on the internet, there's a 90% chance the Fed's going to drop the rate.
Mm-hmm.
How will that impact inventory? Do you think a lower interest rate will bring sellers back into the marketplace that are sitting on the sidelines today?
Yeah, for those sellers that have good financing on their home and will need financing on the next home, you don't want to give up your 3% or 4%, right? So it's a big stretch to go from 3 to 7. It's less of a stretch to go from 3 to 6 or 5. So it will loosen things up, but it'll also bring a lot more buyers into the marketplace, right? So, it's just less resistance on the market. Interest rates can be like brakes, on the speed of the market. And, you take your foot off the brake a little bit, you ease, the rates get lower, then likely you're going to have more sales. And, I'll just share this. I saw it on the internet. I saw a chart. I'm going to assume it's true, but it went back decades, and it had the rate of appreciation and the average rate of home prices. And other than a little of this and a little of that once in a while.
The rate of inflation.
Rate of inflation, what I say.
You said appreciation.
Yeah, well, same thing. So house prices go at virtually the same, whatever the rate of inflation is.
Yeah,
right?
I never heard that
over
before.
time. Yeah, I hadn't either. I go, okay, right? So they get a little bit above the average. They revert to the mean is what they call it. What is average? So
I do recall back in the late 70s when I got in the real estate market where we had, double-digit inflation and double-digit interest rates. I do remember that during that period of time, it surprised the ever-loving crud out of me, the appreciation numbers that are on that similar chart to what you're talking
you would have
about.
think that would have been
down. If you'd have told me that home values were going to continue to go up as interest rates went up, I thought that doesn't make logical sense, but there's no data in history that would suggest that interest rates are going to make prices go down. What I think interest rates do is I think you were just kind of saying it in different words. It impacts the amount of transactions that are happening.
And what people can afford, right? If mortgage rates were 1%, you could afford a lot more house.
Oh, sure.
And that would drive prices up.
Yeah.
I think on the flip side of that, if they really have to, if rates go up a lot, they're trying to slow down the inflation. So I think like the Fed, what I've read and slightly know is, hey, we've got to make sure we don't have people losing jobs.
Right.
If you're trying to take care of the people of your country, are you worried about my eggs are a little bit higher or I don't have a job? Yeah. So they got to balance those things out, right? And I'm not trying to make light of any of those situations, but that's I wouldn't want to be steering that ship.
Yeah, we're talking like we know what we're talking about.
Yeah,
right?
we should get back to real estate.
If interest rates do come down, well, I've been saying if for a couple of years now, this podcaster over the weekend I watched said that they're expecting 5 million additional buyers to hit the market.
Buyers to hit the market. Well, we have a low year is 5-ish. You say 4.6. I think we'll have this year. High year 6.6.
I don't think we'll hit 4 million sales this year.
Yeah, it'll be under 4.
I think it's under 4, and our biggest year was 6 million.
Yeah, over 6.
Right?
It was
Right?
over. It was mid or high
So
sixes.
that's kind of the range in the U.S. of the number of transactions that occur.
Yeah. So if they said 5 million buyers, that means they're not all buying because that's in addition to, right?
Right.
That means you
5
take it. That means
million
that'd be 9 million
additional buyers.
buyers
will flood
but-
the market.
Well, buyers will come to the market, but will it mean sales? It's not going to mean 5 million sales. That means we go from, let's call it 3
or
plus 5 to 8. So,
No.
but I get the point.
yeah.
I know here it will help. I know everywhere it will help, in terms of bringing buyers in.
Well, and we've said this before on this podcast. If you are a buyer, is it the best decision to wait right now for interest rates to come down, and then you're going to be competing with these buyers that are coming into the market, however many millions there are of them, or is it better to hopefully, if as Bobby said, if the numbers can work at today's current interest rate, get the heck in the property, and then obviously you will, if rates do go down, you'll have an opportunity to refinance.
It's I think Bobby said it perfectly, and if rates go down, inflation is just a normal part of what we deal with. Prices of things go up. The price of your shoes used to be less. My stuff, everything goes up. If that's the case and it continues, and it likely will, you want to own things. Now, you don't necessarily want to own TVs or whatever, but things that go up in value. Homes are one of those things. You want to have equity and ownership, right? I've helped my kids with some investing and stuff, and there are times when things that they have owned, financial instrument, something solid, has gone up more than what they might have made in a year, right? And real estate's just one of those things. Now, be smart, don't overextend. You can't get a loan these days anyway. Nobody's going to lend you more than you want. So at the end of the day, Bobby's advice is right on, and it sounds self-serving coming from a real estate professional, but I mean, we believe in what we do, and it's been proven out over the years. So,
what's the old saying about death and taxes? How does that go?
You can't avoid them, James.
The only thing
Inevitable.
the only thing constant.
Is death and
Death
taxes.
and taxes.
You might add inflation to that as well. Because I know as someone who's in the midst of retirement and planning for retirement, my biggest risk that I face today at my point in life is inflation. And
yes,
it's not that I didn't plan to have enough money to make it to the end, but I plan to have enough money to make it to an end with 3% inflation.
Right.
If inflation goes above 3%, that's not a good thing for retirees.
Yeah.
But if we have if inflation goes higher than 3, if you're a retiree and you own property, you might be able to offset that somehow.
Yeah, well, let's think about it. Most people, when we talk about the big transfer of wealth, 70-some trillion, there are numbers
That's my
thrown
next
around.
topic.
Yeah, okay, good. We're thinking on the same lines. But yeah, I mean, you think about it. My parents made reasonable livings, and my dad would build a house from time to time. We didn't have a whole lot. And I went back to that hometown. I drove by some of these places, and I go, boy, if they would have just held one of those, right? And I see it all the time in what we do. And people, it's like, whether it's a family member is getting money because mom and dad have passed away, or mom or dad needs to go into a retirement home, can't handle the house, that pays for their care.
Sure does.
That's I'm witnessing it right now with my own father, right? So it's a pretty darn good financial instrument. Plus, it's a good place to live.
As you think about generational wealth, what's the biggest part of generational wealth? What financial vehicle? And I would, without looking it up on AI and getting the answer on Chat GPT, I would bet it would say real estate.
Yeah, absolutely.
Yeah.
I would say for the most part too. Yep.
Yeah. I mean, I look at the number of properties that you've listed for sale, as you said, and you're listing the properties for sale for the trustees or the beneficiaries of a trust because mom and dad have left us, and And, you got siblings that don't want to own property together. They want to take the wealth that's being passed on to them and go do their own thing, right?
Exactly right.
So I've gotten it wrong every time, so I'm hesitant to guess what I think the interest rate will be in 3 or 4 months. But I am going to say it's going to be lower. We're going to have more buyers hit the market. We're going to have people who decide to sell because they see there's more buyers out there. I think the number of transactions in the marketplace is going to pick up, and we're going to look around 12 months from now, and these next 12 months are going to be better than the last 12 months for the real estate industry.
Yeah.
Anything?
I'm more conservative than you are, but I'm going to have to agree with you today. I just feel like, I've seen it change so much from time to time where first 6 months of the year are great, second 6 or the beginning, is slow, but the second picks up. And I feel like we've been through a pretty rugged little amount of time, and it doesn't happen on a Tuesday, but I would say over the next 4 or 6 months, the market's going to be a little more solid. I think there's going to be more buyer demand. And, with all the cash on the sidelines, I think, every time we check with the title company, number of cash sales is 30, 40, 50%, depending on the day, week, month. So I just think that we're probably near a trough in what's happening in the marketplace. We'll see.
You know what I think we ought to do?
What's that?
I think we've had Christy Chong on our podcasts in the past from Fidelity National Title. Why don't we get her for our next podcast, because I think that topic is really timely and relevant.
Yep.
That makes sense.
James, can we invite Christy to our next one?
She's busy. I'll invite her. We'll see.
Okay.
What's that appearance fee running these days?
It's a lot.
It's 6 figures? Okay. Will you cover that?
At least. Yeah, sure.
Yeah.
Pocket
Okay.
change.
Yeah,
No,
problem.
she
bribe
provides
her a
value.
little bit.
Yeah.
The last time she joined us, we had the most
Was it?
people
Okay.
on view our podcast
Yeah.
than any other.
Yeah,
right?
I think that started her episode's what started our big
Oh, yeah.
After that,
Subscription.
things just started to explode. Yeah.
Good deal. All right.
Well, hey, it's been good to get back
Yeah,
and
it's
do
fun.
a podcast with
Yes.
you. I missed you the last
Yes.
few weeks.
Yeah,
so,
it's been fun.
Yeah.
Welcome back. And
Thank you.
Hey, we forgot what you look like. I wondered who
You're
walked
lucky.
in. Yeah, I know.
Hey,
yeah, it's true.
Can I ask you one more quick question?
Yes, sir.
Do you ever get frustrated when people call you and ask you questions about what's going on in real estate, or they
Not
have
at
a
all.
real estate, any type of real estate
Not at
question?
all.
No, you enjoy that, don't you?
Well, I'm laughing because I was in Idaho, and some people I know are in real estate, and they like to talk about the inner workings of a transaction or that sort of thing, And I just see it more than most. So to me, it's not a long conversation. It's here's how you solve it. But no, I mean, people ask, and I enjoy it. I love it. So it's fun.
So how do they get a hold of you?
We call our office 805-781-3750, or go to our website, which is spelled funny, halsweasey.com, HALSWEASEY.com.
That's it.
See, I can spell my name and count 1 to 10.
Yeah.
These guys always make me
You
count to
can't.
10.
Backwards.
And backwards.
You did it backwards. That
like
was
this,
awesome.
with my finger on my nose. Yeah.
All right, Jeff, what do you have for us?
I just would like to. Would you say the subscribers are?
We're close to 80,000. It's like 78,000 or something like
That
that.
is incredible.
It's insane, right? Yeah.
Yeah. And if you don't make your way over to YouTube to watch these guys talk, you can listen on your commute in, to work, wherever you're doing, and start and stop. Just make sure you subscribe to the podcast, and that way we'll let you know when new
How long
episodes
have we been doing this?
release.
Sorry to talk over you, Jeff.
So-
How long have when did we start this? Is it
We
2.5?
started in May.
It
I
was-
just don't
it
know
was
what
May.
year.
I don't know what year it was either.
We don't know
I
the
think we've
year.
been doing it 3+ years.
I think it was
Has it
May
been
of
three?
22.
3, yeah.
May of
Are
22.
we
No
200?
kidding.
Are we 200 episodes now? I mean, what are we at?
May of 22, so it's been
We're
over
in
3
those
years.
Quiz
Okay.
today.
Yeah.
Good job, you guys.
Yeah.
I mean,
It's because of you. Thank you.
for almost 100. I hope we get one. Are we going to get one of those YouTube plaques? Isn't that 100,000 subscribers? Isn't that when you get your first?
I
one?
don't know. My kids would know because they're always like watching people, and
I want one.
They
I'd like
want
Just to say,
Sounds good.
yeah, I have.
All right.
It says 152 published episodes, so we still got a ways to go.
Okay.
Still got a ways
Good.
to go.
See, we're close.
In my role as consultant to Team Sweasey, this is the most fun that I have in the whole role. I enjoy the
Oh, really?
heck out of this.
That's good.
And I pray every day that we're having a positive impact on the people that
Yes.
listen, that we bring them some value to help them make good decisions about their real estate and their money.
And if that's not happening, you got 2 shirts out of the deal. So that's good.
There we go.
Yeah, that's what we're shooting for.
And I'm sure, Hal, it happens more with you, I'm sure. But even out in the general public, I'm seeing people like, oh, you're from that podcast. I mean, I know people are watching.
yeah.
So it's pretty insane how that happens.
Yeah.
So
we have fun with that.
yeah. And when people come into the office too, they know us from the podcast, which is great.
Yeah.
They feel like they already know us. All right. So yes, if you haven't subscribed, please do on YouTube and then with everywhere else that you listen to your podcast. And that's great. Yeah. If you're commuting to work, listen to it, and we'll keep bringing you great information with these awesome real estate. Not agent. I guess you are an agent, JT. But
Hey, well, you know what?
I'm going to go on a limb here.
Yeah.
Can we say Titan?
Titans.
Yes.
Ooh, wow.
Titans of real estate.
Yeah, now I'm puffing. Not normally doing this.
You don't.
I like
normally.
Titans.
At
remember
least
the
one,
Titans.
Remember the
Remember the Titans.
Football,
At least
Yeah.
one subscriber, James, recognized me in Beach Bums in Cayucas, and I did get a free beer out of it last week.
That's great.
Well, that means these last 3 years were worth it.
Yes, but now we're
That's
up to
right.
That
2
one
shirts
free
and a beer.
God, that's like a touchdown.
Yeah, right.
JT, you've officially made it. Good
Yes.
job.
Yeah.
All right, everybody. Thank you so much. We appreciate you. We'll talk to you guys next week with Christy, hopefully.
Sounds good.
All righty.
Yeah, get her in there.